Money laundering rarely stays within one country. In many cases, funds move across multiple jurisdictions, making detection more complex for financial institutions. But how does this actually work? And more importantly, how is it identified? Imagine a business in one country sending payments abroad that do not match its operations. The funds move through different accounts and eventually return as legitimate income. In this video, we will explain cross-border money laundering from an AML perspective, including how it works, the risks involved, and how institutions detect and prevent it. Cross-border money laundering refers to the movement of illicit funds across countries to conceal their origin and integrate them into the financial system. From an AML perspective, the key concern is the complexity created by multiple jurisdictions. Different countries may have varying regulations, reporting standards, and enforcement levels. This makes it more challenging for institutions to trace transactions and assess the risk. In practice, cross-border money laundering involves moving funds through several countries to create layers and reduce traceability. For example, funds generated from illegal activity in one country are transferred to another under the appearance of a legitimate transaction. The money may then move through multiple accounts or entities across jurisdictions before being integrated back into the financial system. Each step adds complexity and makes detection more difficult. From an AML standpoint, there are several commonly observed techniques. Trade-based money laundering is one of the most widely used methods where the value of goods is manipulated to move funds across borders. Shell companies are often used to route funds through different jurisdictions without real business activity. Informal value transfer systems allow funds to move outside traditional banking channels. Digital assets are also increasingly used to transfer value across borders quickly, sometimes with limited transparency. Financial institutions rely on specific indicators to identify potential cross-border risks. Frequent international transactions that do not align with the customer's profile can raise concern. Transactions involving high-risk jurisdictions or countries with weak AML controls require closer scrutiny. Inconsistent trade documentation or unusual pricing patterns may indicate trade-based manipulation. Complex transaction flows involving multiple countries without a clear business purpose are another key red flag. AML controls are essential in managing cross-border risks. Transaction monitoring systems help identify unusual international activity. Customer due diligence provides an understanding of expected customer behavior and business operations. Enhanced due diligence is applied where higher risk is identified, especially in relation to certain jurisdictions or customer profiles. In the UAE, suspicious transactions are reported through Pro AML portal to the Financial Institutions Unit, allowing further investigations. Cross-border money laundering presents significant challenges for financial institutions and regulators. It increases the difficulty of tracing funds and requires stronger coordination across jurisdictions. Failure to identify such activity can lead to regulatory penalties and reputational risk. Effective AML controls are essential to manage these risks and maintain the integrity of the financial system. Here's a quick recap. Cross-border money laundering involves moving funds across jurisdictions to conceal their origin. It creates complexity through multiple layers and regulatory differences. Common techniques include trade-based manipulation, use of shell companies, informal transfer systems, and digital assets. Financial institutions identify risks through red flags such as unusual international transactions, high-risk jurisdictions, and inconsistent documentation. A practical learning roadmap would include understanding cross-border typologies and associated risks. It would also involve identifying red flags in international transactions. Professionals should build skills in transaction monitoring and cross-jurisdiction investigation. It is equally important to understand reporting obligations and systems such as Pro AML in the UAE. You can accelerate your learning with Pro AML Training, where the focus is on practical scenarios and real-world case studies. Start your learning journey with us at proamltraining.com by exploring a wide range of courses.